This GTV chart on the Bloomberg, though, showing how the Nikkei and the Kospi have been leading the declines across Asia. And not so surprising, given that we have seen this regulatory overhang in South Korea, not to mention this push towards socioeconomic equality. Perhaps something that we are also starting to see in Japan with them pursuing this new capitalism with the new leadership. Is this focus on redistribution of wealth a concern at all for you in these markets?
Well, I think the sort of rebalancing the wealth within the economy is more like a long-term theme, and I think for the moment, I guess the newly elected PM, the priority would be really to revitalize the economy following the lifting of the state of emergency or after lockdown. So the concern about rebalancing, equality in the economy would be a bit medium to long term. And therefore, we're not too concerned for now. But in terms of the near-term prospects of the Japanese market, we have turned quite constructive recently and have been adding positions there, mainly because good progress of vaccination. I think, at least for now, Japanese vaccination rate is ahead of the US, for example. And then there's a lot of pent-up demand and forced savings. Right. And when the economy recovers and people go out buy things, that could be like trillions of dollars or yens chase after goods or services.
So what sectors could give you exposure to that upside?
We have been quite positive on the hardware, semicons, memory chips sector, and we continue to do so. At least at least till the year end. This is where actually is a more global phenomenon in terms of shortage of chips, and a lot of these suppliers and even users, even though the supply constraint might mitigate a little bit, the situation still favors the sector to the upside at least 3 to 6 months.
When it comes to valuations for the Kospi, are they looking more reasonable given the recent regulatory headwinds? And where do you expect to see some clarity on the regulation side?
Indeed, as we speak, I think the national audit is still going on, right? I think over the next 2 to 3 weeks, and chief executives of the leading tech companies are testifying. I think according to the top officials' comments, they're there really not to hurt the sector, but really to understand a bit more how they do things. These are the big business models. I think that the objective really is to promote fair competition and make sure users are treated fairly. So I think there could be still overhang, probably this month, and perhaps leading towards election next March. But I think we are seeing good opportunities there because some of the big, tech blue chips there, valuation has probably down by 30% or 50% after the sell-off. So value is starting to emerge, but we have to be very selective.
We can't talk regulatory concerns without talking about China and Evergrande, right? Do you think that all of the de-risking for China has already happened? And what would you need to see to actually increase exposure again?
Yeah, that's a great question. According to our analysts, they've probably revised down earnings based on regulatory risks. They have raised the risk premium of Chinese market. There's probably not much of further revision, earnings revision down for the moment, unless there are unforeseeable circumstances. Valuation in China is it's decent, but it's not too cheap because earnings are still sort of treading water. But we definitely are not selling at these levels, and it looks like maybe next 3 to 6 months. We could see a bit more clarity and a more sort of institutionalized regulatory framework, either a document or either a big announcement. Then it will give us better clarity, and then we will probably start to see some light at the end of the tunnel.